Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into corporate filings so you don't have to. Today we're cracking open Gold Resource Corporation's proxy statement, and let me tell you, this one has more twists than a gold mine shaft. We're talking director elections, executive pay, and even a little order drama. Proxy statements are what a company sends to its shareholders before an annual meeting, so they can make informed decisions about important things like who sits on the board and how executives get paid. Consider this your cheat sheet to understanding what's really going on behind the scenes. Alright, let's get into it. Gold Resource Corporation is holding its annual shareholder meeting in June. Shareholders get to vote on electing directors, giving an opinion on executive pay, and approving their choice of auditor. The board is recommending you vote for their picks, but we'll dig deeper to see if that's the best move. First up, the election of directors. We have Ron Little, Alan Palmiere, and Lila Manassa Murphy as the nominees. Each of them has experience in the mining world. The main thing to know here is that you as a shareholder have a say in who guides the company. Next, there's a vote on executive compensation, how much the top executives get paid. It's a non-binding advisory vote, which means the company doesn't have to listen to what shareholders say, but they usually do, at least a little. It's a temperature check on how shareholders feel about the CEOs and other top people's pay packages. Finally, there's a vote to approve BDO USA PC as the company's independent auditor. This is pretty standard stuff. Companies need an outside auditor to check their books and make sure everything is on the level, and this vote is about whether shareholders agree with the company's choice. Voting is pretty easy. You can do it online, by phone, or by mail. The important thing is to make your voice heard. The report has letters from the interim chair and the CEO that give their take on 2024 and their hopes for the future. Ron Little, the interim chair, admits 2024 had significant challenges at their Don David gold mine in Mexico. However, they did improve some costs and prioritize long-term projects. They focused capital on a new vein system called Three Sisters and are looking for financing to get things going. CEO Alan Palmiere also mentions these challenges but talks up Three Sisters as a game changer, saying it will reduce mining costs and provide great value. Alright, let's quickly run down the key voting details. You need a majority of shares present to make decisions a quorum. For electing directors, it's a simple case of whoever gets the most votes wins. For the other items, it's a majority of votes cast. The CEO and chair roles are held by separate people. This is good for oversight as it means one person isn't calling all the shots. The board is in charge of overseeing risk management, covering everything from financial reporting to cybersecurity. The board has 3 directors total, 2 are considered independent. This is pretty small, so things could move quickly with a small group of leaders. Let's talk about how the directors get paid. They get cash retainers, meaning fixed payments, plus some stock-based compensation, which helps align their interests with shareholders. The chair gets $140,000 in cash and could get $150,000 in equity. Regular board members get $70,000 in cash with possible $100,000 in equity. Keep in mind these board fees are not paid to the CEO because that's already part of his executive salary. Committee chairs get extra cash. From $10,000 to $25,000, directors can also choose to take their cash payments in the form of stock in the company, known as deferred share units or DSUs. During 2024, the board of directors met 6 times, while the audit committee and sustainability committee each met 4 times. The compensation and nominating committees only met once each, which may be a sign that the company is in relative agreement on compensation matters. Now for the auditors, BDO USA PC. The company paid BDO $645,000 of services in 2024, mostly for audit fees and some tax work. Besides CEO Alan Palmiere, the other key executives are Chet Holyoke, the Chief Financial Officer, and Armando Alexandri, who was just appointed as Chief Operating Officer in April. Here's where things get juicy: executive compensation. The goal of the company is to create value for shareholders. The compensation plan is built on the idea of rewarding executives for good performance, attracting quality people, and being disciplined with pay. To figure out how much to pay their executives, Gold Resource Corporation compares itself to a group of similar mining companies, which is named the Compensation Peer Group. This group includes companies like Americas, Gold and Silver, Highcroft Mining, and Jaguar Mining, among others. In 2024, the CEO's base salary stayed at $495,000. The CFO's salary started at $240,000, but was bumped up during the year to $290,000, with Alberto Reyes, then the COO, earning $341,000. On top of their salaries, executives can also earn bonuses based on performance. The CEO's target bonus is 60% of his salary, while the CFO and COO each have a target of 40%. There's also something called Long-Term Incentive Plan, or LTIP, which are stock options and other stock-related grants, and the amounts depend on the executive's salary grade and the company performance. For 2024, executives received these LTP awards in the form of restricted stock units and performance share units. Each executive received different amount of shares depending on their role and board-approved payout percentage. A large portion of these executives' compensation is at risk, meaning it depends on how well the company performs. This is designed to align the executives' interests with those of the shareholders. The company has a policy that allows them to take back compensation from executives if there's a restatement of financial results. This is meant to discourage bad behavior and ensure accountability. This part shows all the unexercised options, unvested stocks, and unearned shares held by the executives. Here we see what each executive would get if they were terminated, either with or without a change in control of the company. In particular, it is worth noting that if a change of control happens, the key people will get paid multiple times their salary. Finally, there is a table comparing how much the executives get paid to how the company performs. Now, the SEC wants the general audience to see how the money gets paid out relative to the stock performance. If in 2024 the CEO got $817,354, the CEO got $817.35 of, while the average of other executives was $448,943. The company had a net loss of about $56.5 million and a $15 investment in the company's shares. The company even has a share ownership policy, requiring executives to hold a certain amount of company stock. This is another way to link their success to the company's. So, what does all this mean? Gold Resource Corporation is trying to balance rewarding its executives with the need to create value for shareholders. They're facing some challenges, but they're also making efforts to improve their operations and explore new opportunities. All things considered, it appears as though Gold Resource Corporation is facing a tough journey and has been for years. The price of gold has been steadily climbing, and if this precious metal can reach new heights, maybe this time will be different, and maybe we will see Gold Resource Corporation actually make money for a change. Now it is up to you. Are you interested in seeing this movie play out? Well, let me know down in the comments below. Also, if you like videos like this, make sure you hit that like button and subscribe for more.